After gold entered a strong bull market, silver has now started to surge as well. In my previous video about gold, I explained the fundamental logic behind why the gold bull market could last for at least a decade. However, even though both gold and silver are rising, that logic doesn't apply to silver because silver's nature has completely changed in recent years. If you invest in silver using the same mindset as gold, you could be taking on huge risks. In this video, I'll review the real reason behind silver's rally. When analyzing any asset, you need data, real data, not blind assumptions. Those who shorted gold simply didn't understand why it was going up. They just saw a high price and assumed it must fall. I won't repeat everything about gold and silver's similarities. You can check my previous video for that. Today, we'll focus on what makes silver different from gold. First question. How much silver has been discovered in the world? According to the U.S. Geological Survey, about 1.74 million tons. More than half of it, 55%, is concentrated in just 4 countries. In fact, all the silver ever found could fit into a cube, only 55 meters on each side. Second question. How much silver is left to mine? The 2024 USGS Mineral Commodity Summary reports global reserves at 610,000 tons, at the 2023 mining rate of around 26,000 tons per year. That's only about 23 years of supply left. Now, let's talk about its value. Compared with gold, silver has far stronger industrial use. When it comes to analyzing gold and silver, you must separate them. In fact, you should treat them as two completely different assets. When the economy is weak, or even facing a crisis or war, gold will always perform much better than silver. But when the economy is strong, silver will often outperform gold. Why? Because gold has a pure financial nature. It is all about safety and liquidity. Once a war breaks out, the safe haven function of gold activates immediately. Silver, on the other hand, has a strong industrial side that limits its role as a financial asset. When the economy slows down, industrial demand falls. And when that happens, silver prices get dragged down. This difference between gold and silver has become more and more clear as silver's industrial demand grows stronger. For a long time, silver has underperformed gold. That brings us to the concept of the gold-silver ratio. This ratio shows how many ounces of silver you need to buy 1 ounce of gold. When the ratio is high, gold is expensive and silver is cheap. When the ratio is low, gold is cheap and silver is expensive. Many people used to see 60 as a fair value for this ratio. On April 28, 2011, the ratio dropped to around 31. On March 18, 2020, it hit a record high of 124. These 2 points perfectly show how silver's nature has changed over time. From early 2010 to mid-2011, the world was dealing with the European debt crisis. Governments everywhere were printing money to stimulate their economies. At that time, silver was still viewed as a financial asset, similar to gold. After the gold rally, investors turned to the cheaper silver. Since the silver market is small, it exploded upward. During 2010 alone, silver prices jumped about 78%. Global investment demand for silver surged to more than 2.7 billion ounces, with nearly $56 billion of net inflow. Then came 2020. The gold-silver ratio soared to 124. That was during the global pandemic. Shops were closed, factories stopped production, and industrial demand collapsed. Gold still had its safe haven function, but silver suffered a direct hit from falling industrial demand. That is why silver lagged behind gold so badly. Later that year, in December 2020, the US FDA approved Pfizer and BioNTech vaccine for emergency use. Right after that, silver price started to rise again because investors expected industrial demand to recover. Meanwhile, gold prices fell since the vaccine reduced market fears and weakened gold's safe haven appeal. If you analyze gold and silver together without separating their roles, you will miss this logic. You might think the vaccine made both gold and silver drop, but that's wrong. Once you understand this difference, you are already ahead of most so-called experts because many still think with a static mindset. This surge in industrial demand is reshaping how silver is used. According to the World Silver Survey 2024, silver is no longer just a jewelry metal, it has become a technology metal. In 2023, total silver demand fell by 7% to about 1.195 billion ounces. Jewelry demand dropped sharply, especially in India and China, due to high taxes, currency depreciation, and weak consumer sentiment. Silverware demand fell even more, down 25% globally, and in Germany, it plunged a shocking 73%. But the industrial sector told a different story. Industrial silver demand hit a new record, up 11% to 654 million ounces, almost 3 times the size of jewelry manufacturing. The main driver? The green economy, especially the booming solar industry. In 2022, total silver demand had already surged 18% to 1.24 billion ounces, with industrial demand reaching a record of 556 million ounces. Growth came from solar energy, EVs, 5G networks, and chemical catalysts. Silver is clearly transforming from a decorative metal to a strategic metal that powers modern technology and renewable energy. If we look at the data, jewelry and silverware demand has been declining, while industrial demand keeps climbing. For years before 2020, global silver supply exceeded demand, but since 2021, everything has changed. Industrial use has exploded, while mining output fell, creating a significant and persistent supply gap. From electrical switches to solar panels, silver is one of the most irreplaceable metals in modern industry. It's used in computers, smartphones, cars, and home appliances because of its unmatched conductivity and durability. With the rapid growth of renewable energy, demand for silver is soaring. Each solar panel contains about 20 grams of silver. By 2030, demand from the solar industry alone is expected to rise by nearly 170%, reaching 270 million ounces, about 1/5 of total global demand. Electric vehicles also rely heavily on silver. Each EV uses 25 to 50 grams of it, about twice as much as a gasoline car. The auto industry currently consumes around 55 million ounces of silver each year, and that number could rise to 88 million ounces within 5 years. By 2040, EVs might consume nearly half of the world's annual silver supply. Now, which one will rise more in the future? The answer is clear, it's silver. The scarcity of silver is only beginning to be recognized. Industrial demand is growing fast, supply cannot keep up, and that creates a strong long-term bullish force. Of course, all of this assumes industrial demand keeps growing. If we enter a recession, or if global energy policy shifts, silver could fall behind gold again. And in case of war, gold will always be the first to rise because silver depends too much on industrial use. That's my analysis on silver. I spend a lot of time researching before investing, and creating these videos also takes a lot of effort. If you enjoy my analysis, please like, subscribe, and share this video. Thank you for watching, and I'll see you in the next one.